We now move on to question number 3b. This particular question is from the topic partnership accounts and the marks allocation is 8. To be specific, this particular problem is on admission of a partner. Now, in the case of admission of a partner, the accounts that I need to prepare is the revaluation account, the capital account, and the balance sheet as on the date of admission. Now, going through the questions, we notice that D has been admitted as a partner on the 1st of April on the following terms. And what is important to us is that we need to understand on admission of a partner, there will be goodwill valuation. But in this particular present case, they have given us the goodwill for the firm as 22,500. So we will have to check out only how much D will contribute. So D is going to get 2/5 share, 2/15 parts in the business. So 2/15 of 22,500 works out to 3,000. So that means D will have to bring in goodwill of 3,000. And another important thing in admission is that we have to note that the remaining partners on admitting D will have to make a sacrifice. And how do we find out the sacrificing ratio? By taking the old ratio minus the new ratio. So for A, it works out to 1. For B, it works out to 1. And for C, it works out to 0. In short, the goodwill will have to be shared only amongst A and B who have made a sacrifice. Now moving along with the problem, trade creditors, there is no change. Outstanding liabilities, we find no change. General reserves, 9,750. This general reserves will be shared amongst the partners in the old profit sharing ratio, that is 2:2:1. Then the capitals will be brought down as they are given. Land and building 37,500, furniture 9,750, stock 17,625, debtors 8,250, cash at bank 1,650. Now, going through the adjustments, D is going to bring in 7,500 as his capital. So when he brings in his capital, it will be in cash. So cash bank will increase by 7,500 and we will have to give D's capital a credit. Same way, he will also have to bring in goodwill. The goodwill as computed was 3,000 and this goodwill that he brings in cash will be shared amongst the partners who have made the sacrifice. That is A and B, 1,500 each. Then they say that stock should be increased by 3,750. So increase in stock is an appreciation, a profit. Therefore revaluation gets a credit. And stock, we will add it to the closing stock, 3,750. So my value of stock, 21,375. Then we are having a provision is to be made for debtors at 10%. So debtors will get reduced by 825. So this reduction is a loss. Revaluation gets a debit to provision for doubtful debts, 825. Then after that, furniture is to be depreciated by 10%. We reduce furniture by 10%. Net value 8,775. Depreciation is a loss. Revaluation debit to depreciation on furniture 975. Then after that they are saying that we will have to value land and building, which is enhanced. Enhanced means appreciated by 20%. So land and building is appreciated by 20%, which works out to 7,500. So total value of land and building 45. Now your asset has increased. Therefore, it will be an appreciation credit of revaluation, land and building 7,500. Then we are having goodwill, which we have already worked out, general reserves as already mentioned to you. Then they have given us the new profit sharing ratio, which we have utilized for finding out the sacrificing ratio. And then another important point which they have made, they are saying the outstanding liabilities include 1,500 due to R. Our outstanding liabilities, as I said, was 2,250. But now they are saying that A is going to make this payment. So if A is going to make this payment, our outstanding liabilities will reduce. Who's the person who's making the payment? A, who's a partner. Therefore, A will get a credit for it, 1,500. That is by R's outstanding amount. That's it. We now close revaluation account and we get a profit of 9,450, which is shared amongst the old partners in the old profit sharing ratio, so which have been recorded in their capitals. We close the capital accounts and the balances of the partners is then transferred to the capital account, to the balance sheet. Capitals: A 28,680, B 27,180, C 11,340 and D 7,500. So the balance sheet tallies at 94,725.